All right, let's talk about day trading. If you're just starting out, it can feel overwhelmingly complicated, right? Well, today, we're going to break down a super straightforward step-by-step strategy that's perfect for beginners. We're going to see how one trader went from huge losses to making consistent profits, all by focusing on just one simple system. Let's get into it.
This quote, man, it just hits home for so many people who've tried trading. The market can be absolutely brutal. And when you start losing money, your first instinct is to find some complicated, secret system. But what if the real answer isn't more complexity? What if it's actually less?
So that's our focus. This isn't just about a strategy, it's about the massive lesson learned from a $60,000 loss. And the lesson is this: the key to winning wasn't finding a better system, it was actually mastering a simpler one.
This timeline tells a story that is classic in the trading world. It all starts with that beginner's luck on a practice account, making a pretend 300 grand. You feel like a genius. So that leads to funding a real $20,000 account. And you guessed it, losing every penny. Then another account, and another, until the total damage is 60 grand. But the most important part is that last point, the pivot. That's the moment of realization that chasing money was the problem. The real solution was to just stop, breathe, and master one single repeatable system.
Okay, so before we jump into that system, we've got to learn to speak the language of the market. And for traders, that language is all about these things called candlestick charts. Believe it or not, every single one of them tells a story. So what the heck is a candlestick? Just think of it like a mini report. If you're on a 5-minute chart, each candle shows you everything that happened with the price in those 5 minutes. It tells you where the price started, where it ended, and the highest and lowest points it hit along the way. That's it.
And in this story, there are really only two main characters. You've got your green, or bullish candle. That just means the price went up, it opened at the bottom and closed higher at the top. The red, or bearish candle, is its evil twin. The price went down. It opened at the top and closed lower at the bottom. Green up, red down, simple as that.
Okay, the last little piece of the puzzle you need is support and resistance. And the way the source material explains it is perfect. Just think of it like a floor and a roof for the price. Resistance is the roof, a price level the market just struggles to break through. And support is the floor, a level it has a hard time falling below. These zones are super important.
All right, you've got the basics down. Now for the fun part. Let's get into the core of it all, a very specific 6-step strategy. It's called a scalping strategy, which is just a fancy way of saying it's designed to snatch small, quick profits. The whole thing is built to be simple and, most importantly, something you can do over and over and over again.
So, take a quick look at this. This is a snapshot of what we're looking for on the chart. You can see all the pieces we're about to talk about. The price is above that line, we get a little 2-candle pullback, and then boom, there's our special entry signal. This pattern right here is what we're hunting for. And here it is, the whole shebang laid out as a simple checklist. A 6-step process that takes you from setting up your chart all the way to getting out of the trade. The absolute key is to follow these steps, in order, every single time. No shortcuts, no making things up as you go. Let's walk through it. Okay, steps 1 and 2 are all about getting your chart ready to clearly see the market trend. First, you're going to use something called Heikin Ashi candles. They just smooth out the noise and make the trend easier to see. Then, you add one simple line to your chart, the 100 EMA. This is our baseline, and the rule, it's dead simple. If the price is trading above that line, we are only, and I mean only, looking for buys. If it's below, we're only looking for sells. That's it. It keeps us on the right side of the trend.
Now, step 3. This is where patience really comes into play. You see, the market never moves in a perfectly straight line. Even in a strong uptrend, you're going to have little dips. We need to wait for one of those dips, or pullbacks. Specifically, we're waiting to see at least 2 clean red candles pulling back toward our EMA line. Clean just means they don't have any wicks sticking at the top.
And this brings us to the moment we've been waiting for, our entry signal. After that pullback, we're on the lookout for this very specific candle. It's called a Doji. Just look at it. It's got a tiny little body and these long wicks. So what's it telling us? It's basically screaming indecision. The buyers and the sellers fought each other to a draw. And after a pullback, that kind of indecision usually means the sellers are getting tired and the main trend is about to kick back in. But wait, and this is so important, not all dojis are created equal. This is the #1 filter you have to use. We only care about what's called a high-volume doji. How do you spot it without a volume indicator? Simple. You just look at the size of the candle. The entire range of the doji, from the tip of the top wick to the bottom one, has to be bigger than the candle right before it. That tells us there was a real fight. If it's smaller like the one on the right, that's a weak signal. We just ignore it and wait for a better setup.
Finally, steps 5 and 6. This is your exit plan, and you have to know this before you even think about clicking the buy or sell button. Your stop loss is your safety net. You place it just on the other side of that doji candle. That defines exactly how much you're willing to risk. Then, your take profit is your target. With this strategy, you keep it simple. Aim for a 1-to-1 risk to reward. So if your stop loss means you might lose $100, your target is to make $100.
So, that's the system on paper, a simple 6-step checklist. Sounds easy enough, right? But the real question is, does it actually work? Let's take a look at the real-world numbers from the source material.
Check this out. Over just a 2-week period, using this exact strategy on a $100,000 account, the total profit was over $7,000. That's the result of just following the checklist, trade after trade, no exceptions.
Now look closer at these numbers, specifically the win rate, 60%. This is so important. It wasn't 90 or 100%. Out of 20 trades, 8 of them were losers. But because the risk was managed so tightly with that 1-to-1 rule, the 12 winners more than paid for the losers and still left a huge profit. This is proof you do not need to be right all the time to make money.
Okay, I can already hear you thinking it. A $100,000 account? That's great, but I don't have that kind of money. And you're right, that's the biggest wall for most new traders. So let's talk about a way you can get started without having to risk your life savings.
And that brings us to the idea of a prop firm or a funded account. Basically, it's a company that gives you their capital to trade with, say $100,000. You pay them a one-time fee to prove you can follow their rules. And if you make money with their account, you get to keep a huge chunk of it, usually around 80 to 90%.
The advantage here is pretty obvious, right? Your personal risk is tiny, it's just that initial fee. You get access to a big account that lets you make meaningful money. You keep most of the profits, and, this is the best part, if you have losses on their account, you don't owe them a dime. It makes trading so much more accessible.
We're going to end with this quote because it really just brings everything full circle. After all the charts, the indicators, the steps, and the numbers, it all boils down to this one idea. The secret isn't some magic strategy. Most strategies work pretty well. The secret is having the discipline to just follow the plan every single time without messing it up.
So we've laid out the entire checklist for you. The rules couldn't be clearer. But the real challenge isn't about understanding the chart. It's all in your head. It's about having the mental toughness to stick to your rules, especially right after you take a loss and you feel like you need to make it back. The strategy is actually the easy part. The truly hard part is mastering yourself.